It's Friday, August 2nd. I told you on Tuesday of this week, it's jobs week. I had a whole bunch of data this week indicating the health of the labor market for June. We had the July ADP employment report on Wednesday. That was weaker than expected, showing private sector net job growth at 122,000 for June versus 147,000 expected by market economists and 155,000 in June. So a big drop there. Remember, ADP does not include government workers, so just the private sector here. But a weak report. On Thursday, as always, we had the weekly initial unemployment claims for the week ending July 27th. Also showed more labor market weakness, with claims reaching 249,000, a multi-year high, and a long time coming, quite honestly. There's been some fugazi activity in claims data for a couple of years. Anyway, so a spike higher there. How many of our fellow Americans lost their jobs and filed for unemployment insurance? Then this morning, we had the mother of all economic data points released, the July Employment Situation Report from the Bureau of Labor Statistics, that showed more labor market weakness, with net non-farm payroll growth slowing to 114,000 in July versus 176,000 expected by market economists and 179,000 in June. So a big drop month over month. Unemployment moved higher with a narrow U3 measure reaching 4.3%, higher than expected and higher than June. And the broader and better measure of unemployment, the U6 measure, real unemployment moved up to 7.8%, also higher than June. In this report, we also get average hourly earnings. They were up 0.2% from June and 3.6% year over year to $35.07. And then lastly, we get average weekly hours worked, and that ticked down to 34.2 hours in July. These data confirm we are in a low growth environment and moving towards recession levels in terms of economic output. The U3 unemployment number still has the labor market at full employment levels, 4.3%-ish, which should keep the Fed on hold in September. We think of full employment for the U.S. economy somewhere between 4 to 5%. The details of the report reveal ongoing weakness in the labor market that has been evident for some time now. There's been no net full-time job creation. Part-time jobs dominate, and more Americans are working multiple jobs. Moreover, foreign nationals continue to gain most of the jobs over native-born Americans. Let's take a look at some of the details from the Bureau of Labor Statistics. Unemployment rates for adult men, 4%, whites, 3.8%, women, 3.8%, teenagers, 12.4%, blacks, 6.3%, Asians, 3.7%, and Hispanics, 5.3%. Not a lot of movement in those numbers. The number of long-term unemployed, those jobless for 27 weeks or more, changed little at 1.5 million in July. This measure is up from 1.2 million a year earlier. The long-term unemployed accounted for 21.6% of all unemployed people in July. That's why we look at that U6 measure instead of the U3 measure. The labor force participation rate changed little at 62.7%, and the employment population ratio was also little change at 60%. The foreign-born labor force rose again to 32.5 million from 30.8 million in 2023. That's Biden's immigration policy. The participation rate for foreign-born workers rose to 67.3% from 67% in 2023 and well above the native-born population. And the number of employed foreign-born workers rose 1.273 million from 2023 to 31 million workers. The unemployment rate for foreign-born workers did rise year over year to 4.7% from 3.7%. Compared to the native-born labor force, foreigners have won again. The native-born labor force fell again to 137,205,000 from 137,484,000 a year ago, a drop of 279,000. The participation rate ticked up a bit for the first time this year to 62.3%. The number of employed fell again year over year to 131,037,000 to 132,254,000, a drop of 1.2 million. Again, part of that is our demographics, right? It's the baby boomer generation leaving the labor force, but not all of it. The number of part-time job holders rose again year over year by 514,000. Full-time jobs fell 458,000 compared to July of last year. Not good. These data do not paint a picture of a strong labor market, and it's weakening. We've staved off recession in the U.S. due to deficit spending at the local, state, and federal level. So ongoing expansionary fiscal policy, population increases via immigration, and households and businesses increasing their debt levels. The earnings data, the average hourly earnings, shows we still have upward pressure on prices coming through labor. And so therefore, inflation will remain a problem. The case for an interest rate cut in September by the Federal Reserve has been helped by this week's labor market data, though inflation remains a problem. Remember, on Wednesday, we had the Fed decision. I put out a podcast indicating the Fed had kind of a hawkish statement, but a little less so than the prior statements. But sure enough, once again, in this press conference, Federal Reserve Chairman Jerome Powell went dovish, suggesting there could be several rate cuts in the year. And that boosted equity markets. That has reversed since Wednesday. The Fed meets on September 18th for the next meeting, and we'll have August labor data in hand by then. Stock moved lower on this news. The Treasury yield curve moved lower with the 10-year Treasury benchmark back below 4% to 3.82%. The U.S. dollar index fell, and the U.S. dollar moved lower against the Japanese yen and the euro. Commodities are bid today, including oil and gold. Volatility has returned with the VIX spiking to yearly highs of 24.03. The VIX is a key volatility index derived from the Chicago Board Options Exchange, the CBOE. Other data released today include June factory orders at minus 3.3% versus minus 3.2% expected. With durable goods orders, those goods that last 3 years and more, falling 6.7%. So weakness in manufacturing here. So much for Biden and Harris's claim that they're boosting manufacturing. All right, so a little rundown on jobs data for the week, culminating in today's employment situation report. A lot of volatility out there in markets. Keep an eye on headlines. That's all I have for you right now. Always try to buy American.